This is our video blog for June 6, 2011, and like most days we really want to buy the strongest currencies against the weakest, and you can see last night the yen was extremely strong from about 3:30 all the way up to about 8, and what oftentimes happens is after a few hours of strength you have a little bit of a pullback. After this little bit of weakness here, you might have looked for a long or buy the yen, and that didn't work. There was another hour of weakness, and then as that fell off a cliff right here and the weakness disappeared, you might have been looking for buys in the yen, which you can see it was strong for an hour. You would have made money the second time. The pound, very weak today. The daily, weekly, monthly trends down. Same thing with the CAD up until 8. So up until 8, you would want to sell the pound yen. Very weak pound on all time frames. Daily, weekly, monthly trend, and real-time trend are weak. Let's look at that one first. And this one went from above to below the hourly right here around 3 o'clock, 3:30, and that's the time to begin looking for aggressive sells. When it went sideways here at the hourly, and you have a 200-day moving average right here too, that was major support, support, support. When that gets broken, stops are likely to get hit, which cause selling. And usually you'll find at least a 20 or 30 pip move in the pound yen, pound dollar, euro yen, all the high volatility currencies. When an area that gets hit 3 times, that's a support level, gets broken. And plus, as this was going sideways, you can see, real-time weakness. There was no strength, a few bars of intense weakness, and then it broke down. And usually when currencies weekly, monthly trends are down and you break any kind of support level, you can usually expect a 2-wave move. So if you're a little bit longer term trader and you want to hold for a couple hours, you short right here around 131.80, and usually you can expect the first or second fib target to be your profit target. This one also happens to be one of the Fibonacci retracement levels that I draw each night, so you don't have to. I spend 30 or 40 minutes every night drawing the fibs and fib targets, and it's a real-time intraday Fibonacci area, and it's a Fibonacci retracement area off a longer term chart. Very high probability end of the move, and this one did ultimately go a little bit lower, but the first trade of the day, that would have been a good profit target. If you're a scalper, you might have went short here, and when it started to go back up here, get out. It went up. There's a little bit of strength here, then weakness came back in. You're short again, and you might have got out of the trade here. Another pullback, you go short again. Another pullback, you short again. You didn't make much money that time. This one's kind of going up, and there's a little bit of strength there, but as it goes sideways, notice the divergence. Double top with almost no strength the second time. Decent place to go short again, and you're not expecting at the time for it to go underneath the 28 area here, so you have a 10 or 12 pip profit target, but it keeps going down, and then the weakness goes away. There's a little bit of strength right here. You might have got out of that trade here at 24 for about a 14-15 pip profit. Let's also look at the very strong yen against the weak CAD. CAD yen would have been a great one to sell until about 5:30, and then from 7 to 8 it was weak, and then the weakness disappeared. Looking at the CAD yen, this one also broke underneath a Fibonacci area, which was support here, was support here. Once it breaks underneath there, it's very likely to go down. Stops are likely to get hit, and you don't ever know how far it's going to fall. But this one fell without that much weakness, and it fell about 30 pips. You might have shorted it here when it broke down underneath the fib level, or when it broke down underneath there and wasn't able to go up. Another safe, high probability short is right here. There's really only 2 entries that we focus on, and one is a pullback trade, where you have a trend and then it goes the opposite way for 30 minutes to an hour. I prefer 20 or 30 pip pullbacks. And then the second entry is a sideways rectangle pattern, where you have at least a half an hour to 2 hours of sideways rectangle patterns, and then when it breaks underneath there, you go short. Once it starts to fall, you move your stop in half, and then once it moves 10 or 12 pips, you move your stop to break even. And most of the time you want to look for exits at the Fibonacci profit target level. So somewhere down here, it's not likely to go below the 1.618 level. It's not likely to go below, or I should say it's less likely to go below the lower containment bands, especially when you don't have incredible weakness. So you're out of your trade with maybe 15 pips in this instance. Now if you're a scalper, you have some strength also in the dollar. Unfortunately, the weekly and monthly trend are down, So you're not expecting a whole lot of pips, but if you see a little bit of strength come in, it's not unreasonable for the dollar to be strong for an hour to 3 hours, even if the weekly and monthly trend's down. Trade it against one of the weakest ones, and today, that would have been the pound. So you could have also traded the pound dollar, with some tiny, uh, you know, short-term profit expectations, 10 to 20 pips. Seems reasonable. When this broke underneath hourly and went sideways here, you might have went short and only pulled back 10 pips. This is why you have to be nimble. You would have moved your stop to break even, or maybe you would have taken 10 pips off the table when it went sideways here. Notice on this bar right here, there's not that much weakness. The weakness that was there all of a sudden disappears. Then you have some strength here. So you get out of that trade, it comes back up to the hourly and can't break it, double tops right here. You go short again, comes down to the monthly pivot, which is a major support area, decent place to get out. Comes up to the weekly pivot level, decent place to short. And most of us who are scalping are going to use our tick charts, to find the perfect entries. For example, this pullback up to the weekly pivot level right here, you might have gone short right here when it kind of went up here and started to go down. You move your stop above the high here, down here. You might have lost 2 pips on the first one. Comes back up to this area again, stalls, comes down, you go short here, and the second trade worked. It pulls back, you can see about 15 pips. So you lose 4 or 5 pips the first time, make 15 the second, and so forth. And looking at it previously, on that previous trade we just talked about, you have your tick charts here, it goes down, comes up a little bit, comes down, doesn't break this low. As a scalper, you're out somewhere around here at 12. Maybe you made 5 pips on that trade. Comes back up to the hourly and runs out of steam right here. You go short, and just by looking at the price action, you can see it doesn't really want to fall. Comes down, goes up, comes down, comes up, comes down, and goes sideways right here. So you got to move your stop down. The trades are going to work typically, go your way pretty quick. So that's how you can scalp, and even when trades really don't pan out, oftentimes make 2, 3, 5 pips using the tick charts. Obviously, the pound yen was a much more smooth trending currency, and you would have had a better luck with many of the scalp trades in this. The euro, was quite strong until about 3:30. So you could have also traded the euro pound. You want to buy the strong euro against the weak pound, until about 3:30. This one went sideways right here. This is an example of the sideways rectangle breakout. And they're especially good after 2 or 3 hours of sideways, very low volatility action. This is moving 5 pips for 3 hours. So it breaks out, pretty high probability. You would have been long here. It takes it about 10 minutes before it really starts to go up. And it goes right to a monthly pivot level, and it runs out of steam. It only went up 10 pips. It's very choppy. You probably wouldn't want to trade a currency that chops around like this, but the first trade of the day looks decent. And when it makes a higher high on the day, that's a very big sign of strength. So you buy the pullback right here, and it goes up to upper containment bands. And again, that's a very high probability place to get out of the trade, especially if there's not a lot of strength. It's not likely to go above that area. And if the weekly and monthly trend were down, you might even consider selling there. But those are the best trades today using our currency meter and tools.